COWZ, ticker symbol COWZ, is a unique value ETF that is unlike anything that we've covered on this channel so far. I had a few run-back moments as I researched for this video. It was mostly positive shock, just to be clear. It uses weirdly simple but effective methodology for the selection process. We're going to dive deep into this one to help you determine if COWZ deserves a spot in your portfolio. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please tap that like button, subscribe if you haven't already, and drop me a comment down below with your thoughts about this ETF or anything else that comes to mind. We had 9 new channel members this week. A huge shout out to the 9 of you that are on the screen now and to everyone that's been here all along. I hope you're enjoying the emotes and the badges and the comment priority, and most importantly, the nerdy spreadsheets that I've been putting out there. I'll continue to build this thing as time goes on. I really do appreciate that extra support that you're showing the channel. You are making this possible for me. Let's grow. COWZ Basics. COWZ is the Pacers US Cash COWZ 100 ETF. And it seeks to track the performance of the Pacers US Cash COWZ 100 index. This index uses the following methodology. It excludes stocks from the financial sector, and it also excludes companies with a negative forward yield, free cash flows, or earnings estimates. Of all the companies that remain, which is most of them at this point, they are ranked by free cash flow yield, and that's for the trailing 12 months. And then the top 100 are selected. The index is rebalanced and reconstituted on a quarterly basis. Most ETFs rebalance quarterly, but the reconstitution on a quarterly basis is fairly unique. I've noticed that most of them seem to take an annual approach, and this is when they add and drop companies from the index. The top 100 companies that were selected based on their free cash flow are then weighted by their trailing 12-month, you guessed it, free cash flow. The index weightings are capped at 2% each, so this keeps this ETF from ever becoming top heavy. And that's it. It's simple to the extent that it literally only assesses free cash flow. No advanced Excel workbook is needed to score this one. And the idea behind the hyper focus on free cash flow is that the companies in the index will be able to pay their business expenses with ease and have a surplus of cash for things like stock buybacks or paying shareholders dividends or putting it back in to grow the business. And love it or hate it, it works. Let's get more into that. COWZ Key Metrics. Let's find out what makes COWZ so different. I pulled up COWZ out on Seeking Alpha, my favorite site for researching stocks and ETFs, and I do have an affiliate link in the description below if you are interested in a 7-day free trial of Seeking Alpha Premium, and if you like what you see, you'll save 25% off your first year. I like to start on the summary tab, and the 2 primary things I look for out here are the expense ratio, which COWZ has a pretty high expense ratio of 49 basis points. That's 0.49%. That does not keep as much money in your pockets compared to a lot of the other passively managed popular ETFs. And then its assets under management has really grown since I've been tracking over the last year, but it's almost 23 billion. So it's well funded and it shouldn't be going anywhere anytime soon. Now we get into some of the things that make COWZ unique, and we'll start here on the holdings breakdown. You can see it's very heavy in energy at 23%, and then it has a nice slice of consumer cyclical as well, and then you're about 12% healthcare and industrials, and it comes in about 9% technology, 9% basic material, and 7% consumer defensive. Very energy heavy, which isn't necessarily a bad thing in a vacuum, but it can increase the volatility at times. And for the top 10 holdings, I won't read all these companies off, but there's a lot of household dividend names here. You can see that none of them are very much over 2%. Vistra must have had a big run up to be over 3, but generally speaking, they're around 2% or lower, and these are rebalanced quarterly to bring them back to 2%. There's 104 total holdings, and the top 10 only makes up 22.5%. That is extremely low compared to most top 10s. I like the diversity there. All right, we're to my favorite section, and that's the dividends. Now, this scorecard is a little little deceptive, and I'll get more into that. The trailing 12-month dividend yield for COWZ is 1.88%, not too shabby. Its dividend growth rate for the trailing 12 months has been 7%. Over the last 3 years, the compound annual growth rate, the growth per year, is 14%. That's incredible. And over the last 5 years, it's 17.5%. This is as high as anything I track in the ETF world. But while these numbers look great on paper, especially this 5-year growth rate of 17%, I want to dive a little deeper here on the dividend growth tab, and we'll pull up the last 10 years. You can see that it started paying dividends in 2016, very low at 3 cents a share, hopped up to 56 cents a share in 2017, and then in 2018 it went down to 43, up to 61, up to 85, and then down to 70. I don't like that. And then up to 90 and up to 1. Certain CAGRs will look really high depending on where the peaks and valleys happened, but comparing it to something like SCHD, we'll pull that up here real quick. When you look at SCHD's last 10 years, it has never gone down ever. Now you have the 105, 115, 126. We'll just kind of hop along here. I won't read them all, but you can see it just barely went up last year, but it still went up. But I like that consistent dividend growth, even though the numbers aren't quite as staggering at 8.56 over the last 3 years and 11.8 over the last 5 years compared to that 14 and 17. But there's something to be said about consistency. Okay, time for the fun part, the charting. Let's see the total returns of COWZ compared to the competition. Now, I do have it set to total return here, as you can see, and currently we're on year to date. I pulled up COWZ, of course, because that's what we're talking about. And then the most important comp is oftentimes the market, VOO, to see how it's compared. And then I pulled up some of my favorite dividend ETFs, that's SCHD and DGRO. I have the value ETF from Vanguard, VTV, and the technology growth ETF from Vanguard, VGT, which is my favorite ETF. And I'm not saying COWZ is growth, but I just wanted to get a cornerstone, some dividends, a value, and a growth, just to get the full spectrum. Realistically, I compare it to SCHD for my personal portfolio. I'm not replacing VOO, and I'm not replacing VGT with it. So year to date, it's up almost 5%. The market is up a staggering 11%. That's pretty darn good. SCHD is barely better than flat. It's been rough. DGRO is just ahead of COWZ. And then the value index, same story there. And VGT growth is up 13%. Let's zoom it out a year. COWZ has a very solid 23%. The market's up 27%, so it's just higher. SCHD is still a paltry 12%. DGRO 17%, so COWZ has beat both the dividends here over the last year. The value is trailing COWZ as well. And then VGT's up 31%. And growth has been soaring over the last decade, so that's gonna be a common trend. When we zoom it out 3 years, things get a little more interesting. COWZ is up 35%. It's beating the market, which is up 31%. It's absolutely obliterating SCHD and DGRO. It's crushing the value index. And of course, it's falling shy of VGT. So you're like, okay, 3 years, let's see how you did over 5 years, huh? Getting cocky? Getting cocky? Oh, okay, now I see why you're cocky. COWZ is up 125% over the last 5 years. To the market's 105. SCHD, a little more respectable, but still lagging, 78%. DGRO, 75%. The value index, which I'll show you why it's such a good comp here in a minute, is up 70%, so trailing COWZ big time, and then VGT's up 191. And we can't zoom it out 10 years, but we can go to COWZ inception. Okay, so we started getting data on 12/20/16 on the charts. So that's what I zoomed it out to. So we're almost, 7.5 years or so. And we have COWZ at 153.5%. The market is outperforming it, but it's very close during that time frame at 165. It's crushing SCHD, which is at 123. It's crushing DGRO, which is at 132. The value index is lagging, but it's been like that over the last decade. It's at 105, and VGT is at 372. That's just not fair. COWZ, I consider value holdings though. So to see it crush its real competition here, VTV, by quite a bit, is downright impressive. I threw together this quick spreadsheet to compare some of the key metrics of my favorite ETFs to COWZ. So I just wanted to first point out, you can see the category, it's primarily mid-cap value, and the other ones are all large or technology. So I just wanted to show that it adds some unique value there. But when I'm just gonna collapse this to make it easier to see. For the trailing 12-month yield, you can see, we'll sort these as we go here. So it's somewhere in the middle. Of course, the dividend ETFs, like SCHD and VYM will be up here. The value ETF's pretty good at 2.5 as well, and DGRO is right there with the value. It actually looks like it falls right in between the two dividend growth ETFs. So we're right there at 1.89. Now this category hurts, the expense ratio. Most of the things I like to roll with are below 0.1%, or at the most like VGT or QQQM, the growth ones, just over 0.1% and under 0.2. But this 49 basis points here, it doesn't seem like much, and I don't want to waste too much time in this video. I have other videos that show just how much that adds up over the decades. You truly won't believe it when you see the numbers. So it does matter, I can assure you. But then this was the reason I put together this spreadsheet. I was blown away when I saw this. COWZ is under a 13 price to earnings ratio. Lower ones, generally speaking, are value companies. Higher ones, like these SCHGs, QQQMs, these guys, are typically quote unquote growth companies. And then you have, the market is usually somewhere in between. It's a little high right now, but 24.4. It has a mix of value companies and a mix of growth companies. But compared to SCHD, which is one of the more value focused ETFs I track, it's lower by over 3 price to earnings. I was just blown away by this. That cash flow methodology really squeezes out some value companies here. It's lower than VYM and SCHD, which is hard to do. They're pretty conservative. And then you have value, the actual index, 18.5. Like I said, the market here at 24, and then these guys are over 30 for the growths, but I just couldn't believe this right here. Some cool diversification. And then another thing that I really found interesting about COWZ is, here's the overlap with COWZ. So of course, it has 100% overlap with itself. Quite a bit of overlap with SCHD, not a ton, but 19%. That's the most I've seen, because SCHD tends to have very low overlap with all the other ETFs I follow. But then if you look, it only has a 12% overlap with VYM, an 11% overlap with a value index, 10 with DGRO, and then 5 or less with VIG, the market. I absolutely couldn't believe this one. Most ETFs tend to have a very high overlap with VU because they focus on large cap, just like VU, the 500 largest companies in the United States. So it makes sense knowing that these are mid-sized, but just seeing that 5% overlap can really help you create some nice diversity in your portfolio to add in a slice of COWZ. And then of course with these growths, it has hardly any overlap. So this is truly value in every sense of the word. And that's why I was emphasizing it against the quote unquote value index earlier. COWZ Portfolio Fit. I think any portfolio should consist of at least 3 types of ETFs. We have cornerstone ETFs that cover the broad market like VU, VTI, or VT. Then you have your growth ETFs like QQQM, SCHG, and VGT that focus on growth stocks. And then you have your dividend and value ETFs like SCHD, DGRO, VTV, and ETFs like that focus on value and or paying dividends. The amount that someone should hold in each of the 3 types will depend on things like their age, their risk tolerance, their retirement goals, their work situation, and their current wealth. It's hard to label COWZ as anything other than a value ETF right now. Its price to earnings ratio is under 13, which is wild in today's market. I group up value and dividend ETFs in my modern 3-fund portfolio. So if I were to add COWZ, I would reduce my position in SCHD to make room. I would not sell any of my growth ETFs. The key metrics look great and all, but it's time for the moment of truth, and you know where I'm heading with this. COWZ Backtest versus SCHD, VTV, and VU. COWZ is tough to label because of its unique methodology and its unique holdings. We're going to put it up against some of the heavy hitters across multiple categories. SCHD will be representing the dividend ETFs, and then we'll use VTV, Vanguard's value index, for the value competition, And of course, as always, we will add in the market or the S&P 500 by using VOO, V-O-O. We are out on one of my favorite websites, Portfolio Visualizer, and it's up here. You can't see because I zoomed it in to show you guys as much information as possible on my screen share. There's great and terrible news about Portfolio Visualizer. This is where I do all the back tests on the channel, and I'm sure you guys have become accustomed to this layout and overview. So I will say Portfolio Visualizer is a lot better now, and it shows some really cool information. We'll dive more into that as I go through these stats. But the bad news is that we are unable to look back over 10 years now for backtesting portfolios. Only the paid version, the pro version, whatever they call it, premium, something like that. It's $30 a month, paid in a full year at a time, $360 a year, to be able to look back over 10 years now. The data that it provides, that we'll get into here soon, I would say is better than ever, but unfortunately, it is behind a paywall. I am currently working on getting an affiliate link with them, so I can try to save you guys some money if I'm able to provide that and get a discount on your first year. But unfortunately, there is no way other than signing up for the paid version to see over 10 years now. Now, in today's video, that doesn't matter because COWZ started in 2016, so we can only look at full years here. It's the January 2017 through last month. So we're actually unaffected in this particular video, but I might have to cough up the money if I can't work out a deal with them to show you guys good back tests in the future. We're gonna start here at the performance summary. It looks a lot different than it used to. It used to lay it out the other way. It's kind of flipped it around on us. Oh, and just so you guys know, I did starting with 10,000. We're putting 1,000 in a month, every month, and we're reinvesting dividends. I forgot, the criteria is a little different too, but I did put that in there just so you guys know. So you can see with the scenario of starting with 10,000 and putting 1,000 in a month, you end with 178,000 with COWZ, 153,000 with SCHD, 149,000 with VTV, and 167.5K with the market. So COWZ actually took first place here. And it has now, they have a time weighted return and a money weighted return. COWZ, I believe, wins across the board on those. It does. You can see it has a little higher standard deviation. So there's where the value index and SCHD shine a little more. Its best year was the best by far. Its worst year was worse than these by far, not worse than the market. And then it's Sharp and Sortino. You want these high for risk adjusted returns. Right, they're ballpark with the other guys. Here's the annual return section. Not much has changed here besides the color scheme. You can see COWZ is blue, SCHD is green. This gray one here is VTV, and this, I don't really know what color that is the market. You can see COWZ has a rough year in 2018. It's a little less correlation to the market, which we saw earlier. Didn't quite have the up year there, but then you'll have years like 2021. So it gives you a little diversification away from the norm. Here it was flat in 2022. That's actually really good, up 0.2%. SCHD saved my portfolio there, and you can see the value and COWZ did even better. And then it bounced back, and it still was pretty solid in 2023. So it's performed pretty well. So far this year, it is the highest at 5.93%, and the market's right behind it at 5.64. And we still have our trailing returns. So in the last 3 years, our annualized returns, this doesn't care how many dollars were put in and when. This is just how much the fund went up in a 3-year stretch. It was up per year of 11.2%. Crushes SCHD at under 5, the value index at 7.5, and the market at almost 8. In the last 5 years, it's also taken the crown at 15.3% versus 11.1 of SCHD, 9.9 of the value market, and 13.1 of S&P 500. And over the full 7 years and change, it is the top spot, but just barely over the market. It's at 13.68 versus 13.56. And then SCHD has outperformed the value index by about 1.5%. So COWZ is the best performer by most, if not all, of these metrics. And the portfolio income is still here, and it looks like SCHD, the green bar, kind of takes it off on this one. The value index and COWZ seem to be competing with each other fairly evenly. It lacks a little bit behind the dividend ETFs of the world, but it's right there with the value stocks. Okay, so I'm not going to show this for all these, but I find this really neat. This is a new feature. It's new data that Portfolio Visualizer provides. You can see here for the first portfolio, which was COWZ, it shows mid-cap value. That's where I made that spreadsheet from. I actually copy-pasted this to start that spreadsheet. But it shows you its trailing 12-month yield, and it's SCC yield, but this is where I usually like trailing 12-month, 1.89. Its expense ratio, that one's a little brutal, but you want to look here, 0.49. Here's where you can get the PE ratio in a nice clean manner as well. So what I did was I just entered a whole bunch of tickers and put them at 10% each so they were all in the same portfolio and then made that spreadsheet. But this is good information. I actually found that my 50-50 mix of SCHD and VGT has a slightly lower PE than the market. It's really close. And then if you scroll down a little bit, it shows, and you can get this information on Seeking Alpha too, but it's kind of cool to see it here. Like it's heavy energy, as you can see, 24%, but it just shows a breakdown by sector. And what I really like about this, I do my modern 3-fund portfolio and it'll show me my technology overall, like with all of my VGT, VU, QQQM, and SCHD in there. So this is a cool way to quickly save myself time to see exactly how I'm weighted by sector when I put in my exact portfolio. Am I buying COWZ? I have a hard rule that I will never break when it comes to ETF investing. I will not touch an ETF that has an expense ratio of over 0.5% or 50 basis points. You may wonder why investors emphasize expense ratios so much. It's because they are the #1 predictor of future performance. This has proven itself time and time again. COWZ has performed wonderfully since its inception, and it's a great way to diversify your portfolio. It has very low overlap with all the other popular ETFs that I track. I just can't get past that 49 basis points expense ratio. I'm going to continue to watch this thing because it's been incredible, but I'm sticking with the wait and see approach. I want to see it prove itself for at least 10 solid years since its inception. Let me know what you think about COWZ in the comments below. I'm honestly more interested to hear feedback than this one than I typically am. And don't get me wrong, I always love your guys' feedback, but this one just feels a little bit more unique than the typical ETF that I talk about on the channel. Check out one of these 2 videos if you're still awake at this point, and if for some reason you want to listen to someone like me talk about this stuff some more. Thank you for watching, and I will see you next Sunday. Peace.